Turning now to Africa and the Middle East, this quarter focused on further unlocking the value potential across the region as one of our main cash generators of the group. We saw a solid performance across the portfolio with encouraging improvements at Kibali. In Mali, we continue to manage the situation in a measured and constructive manner. We are continuing with arbitration, and we are committed to finding a path forward for the benefit of all stakeholders. For those of you tracking updates closely, I encourage you to visit the microsite we recently added to our website. Kibali delivered another strong quarter with higher production and improved unit costs across the board, supported in part by a reduction in sustaining capital. We also commissioned the solar power plant and battery energy storage system, further strengthening Kibali's position as one of the most automated and also one of the greenest gold mines in the world. Tanzania delivered another on-track quarter, with North Mara continuing its steady performance. At Bulyanhulu, work continues on the expansion project with a focus on a second access and production area to support future growth. Gold sales during the quarter trailed production slightly in Tanzania as we adapted to the new legislation requiring 20% of the production to be reserved for in-country trading with an associated royalty reduction benefit. And now Zambia and Lumwana. We are very excited about our progress at the Lumwana Super Pit expansion. The operation continued its steady upward trajectory with year-on-year and quarter-on-quarter increases in production and a positive reduction across all key metrics. The expansion project itself is well on track. We've refined the development plan, and Lumwana has self-funded the project through operating cash flows so far this year, and we expect it to do that for the rest of the year at current spot prices. Once complete, the expanded operation is expected to deliver 240,000 tons of copper per year, supported by a 52 million ton per annum processing plant and a mine life of more than 30 years. And it's worth just looking at the right-hand side of the results there. And if you look at last year, Q2 2024 production, copper produced 25,000 tons, and then Q1 25-27, Q2 25-44, and a commensurate drop in the unit costs per pound of copper and all-in sustaining costs. It's very material, and that's where our focus is. Lumwana is a mine that, since Barrick acquired it, never made a profit until 2020. And it was all in discipline and unit costs, and today we are going to expand that. And we need the all-in sustaining cost to be under $3. And then that proves our feasibility model extremely well. As you know, there are not many copper mines that are capable of delivering -$3 a pound all-in sustaining costs. And again, Africa and the Middle East remains well positioned to replace its reserve depletion again this year, a hallmark of the region over the many years that it's been operating. And this quarter, we continued to advance near mine exploration with standout progress along the ARK corridor at Kibali, with drilling extending mineralized lodes and confirming significant exploration upside. And that ARK sits right next to the main KCD ore body, which is the real basis of Kibali's value. Greenfield programs are also progressing across the region in Tanzania, the DRC, and across the Central African Copper Belt, which spans both southern DRC and Zambia. In addition, we continue to advance our early-stage exploration in Saudi Arabia, further reinforcing the depths of our pipeline across this region. This slide really speaks to the strength and resilience of our portfolio. While we continue to work towards a solution for Loulo-Gounkoto, it is important to note that even without it, the underlying value of our portfolio still significantly exceeds our market value. Barrick remains a peerless opportunity to invest in a world-class gold and copper business, and few, if any, companies in the sector can match the depth or quality of the growth you see here. We grew production in Q2, and the second half, as I have repeatedly said, is set to deliver both higher volumes and lower costs in line with our full-year guidance. At the same time, we're replacing the gold and copper we mine and growing 30% organically by 2029. This is a portfolio we are building to deliver over the long term, with Tier 1 assets, world-class people, and a disciplined capital allocation strategy backing it all. It is our opinion that Barrick remains one of the most compelling investment cases in the gold and copper space today. This is an enterprise with world-class assets, a clear growth strategy, and the balance sheet to fund that growth without diluting our shareholder equity. We're consistently delivering on our promises, growing production, replacing our reserves, and returning more capital to shareholders. This is a company built on the foundations of long-life assets, strong partnerships, financial discipline, exploration excellence, and a sustainable operating model, the pillars that underpin everything we do. In a world searching for real assets, strong partners, and responsible growth, Barrick stands apart. Few can match what we offer, and fewer still can do it without debt or dilution.